Hey, good afternoon, everybody. It is July 13th, and you're watching the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And I want to welcome you to our recap for the day. And guess what, folks? We are kicking off earnings, and tomorrow morning is going to be when the big banks, we're talking the big boys, the Citigroups, the JP Morgans, the Wells Fargo, and some decent-sized regional banks in PNC. This is going to be a big earnings cycle, folks. You need to be prepared. One thing that's notable, though, today, that fear index that I discussed, that volatility component, non-existent. Volatility was down 40 cents to 990. For those of you that don't know what volatility or the VIX index is, that is a measure of potential violent moves or fear in the market. Now, those moves can either be violent up or down, and historically, it's on a scale of 0 to 100, and historically, this thing's median is around 20, 22, 21, and it's trading down at 990. This is very cheap. I can't even use the word complacent anymore, marketplace, as far as what people are anticipating in terms of movement. Taking a look at the markets today, you see that the Dow Jones finished up 21. It was a muted session, a big grind. As a matter of fact, if you take a look at this bar right here, this is basically the trading day. And the reason why I use these charts, folks, is I want to give you a visual of what I'm discussing. And when you see a market that's basically been trading at or above these lines, the green line and the red line, the green line is the 20-day moving average. That's just 20 days of trading history on a line. And they average it out over that time period, 50-day. This gives you the short-term and intermediate-term idea as far as trend and who's in control. And right now, the bulls are clearly in control. That was tipped off by the fact that we have low implied volatility and the fact that the market had been straddling its short-term moving average at right around 21,380, 300, and basically just took off in the last couple of sessions. This has been an impressive move by the bulls, but what I want to note is watch volume. Volume was non-existent today, especially on the large cap indices. So as we go into earnings with low volatility, low volume, there could be some potential fireworks, even though our fear indicator isn't showing an expectation of that. Taking a look at the S&P 500, you see that it again is trading much like its peer, large cap peer, the Dow Jones, above its 20-day moving average. It finished the day, the SPX cash, at $2,447.80. Not that that's a huge impressive move, but it had a battle here between the 20 and 50-day moving average. This is where I watch. A break of the 50-day moving average would have meant a potential trend shift. That's what we watch for as far as looking at these moving averages. That's it. I don't get any forward-looking concept here. This isn't telling me what's going to potentially happen in the future. That's why I use implied volatility. This is telling me what's happened in the past and what people are positioning in going into the future. And as we can see, the bulls have positioned themselves and are starting to move to the upside. Let's see if that continues with the large cap banks, which we'll discuss in a minute. I'll give you some idea of what estimated moves could be expected in just about 2 minutes. Taking a look at the NASDAQ, though, large cap tech continues to move to the upside. It was challenged. You can clearly see that it challenged and got below its 50-day moving average. It looked like the fangs were going to get weak, but then we saw the likes of Netflix, Apple being one of the biggest winners today, and Google. They were leading, especially Apple up a couple bucks after really lagging. If you take a look at Apple, and we mentioned this, Apple just moving to the upside. Nice big move up $2 on the $147 stock. Just blew through its 50 and 20-day moving averages. The bulls are starting to take short and long-term control here, but we'll have to watch this very closely. The Russell 2000, watch the PNC, the results from that small regional bank. Well, they're not small. They're a pretty decent-sized regional bank, but with that being said, if you see any weakness in either the large cap banks, that could flow into the regional banks. Yes, the Fed came out, Chair Yellen in her statements today it seems like they're pretty comfortable on their inflation targets, growth targets. There may be some little wiggle room that they put in her statements, but the point being is they're comfortable with their current stance. We're really not getting a lot of visibility on balance sheet reduction from the Fed, and that could put a little bit of uncertainty into the market if we don't start seeing that and start feeling that a little bit more. But the Russell 2000, it has been trading to the upside for the last 2 sessions after putting on a little bit of a battle at the 20 and 50-day moving average. And again, little context here. In full disclosure, I do have my clients positioned in the small caps. Taking a look at crude oil, finished up the day 64 cents at 46 bucks and 14 cents. It's an interesting push to the upside, still in a battle. You clearly see that any bulls in crude, they have to get above this 46.58 number, and I still think that we're looking at that $44, $45 level as that sweet spot. Yes, the inventory draws have been impressive for the last 2 weeks from the storage. Basically, you're looking on average right around 6.5 to 7 million barrels of oil being withdrawn from the storage. But remember, we're at basically 3 and 5 year highs as far as average storage is concerned, over 500 million barrels. We are seeing also gasoline and distillates being drawn over the last couple of sessions. In full disclosure, my clients do have a position in oil. Taking a look at Brent, moving to the upside as well, challenging that 47 level, but well off of what the pundits were saying is the mid 50s, 60s, 70s. So we're going to watch the commodities very closely. Use the currency markets as a little bit of your barometer. Currency markets, specifically the US dollar, weakness in the dollar is usually a benefit for the crude markets and the commodity markets in general. Watch that closely. Copper, though, did pull back today. It pulled back to 266. I don't like that action for the non-ferrous metal. That puts a little bit of a yield flag, a hazard flag. Not yet a red flag, but more of like a yellow card in soccer as far as industrial metals are concerned, infrastructure plays, materials. That's why this earnings cycle is going to be very important to see how those are actually shaping up, and also watching the data very closely. Bonds pulled back pretty precipitously. It was trying to get our late stage rally for the last couple of sessions, but you can clearly see it hit its 50-day moving average and pulled back. Bond bears are starting to dig their heels in right here. TLT finished down 78 cents at 123, especially after the comments from the Fed. We're going to have to see when this balance sheet's going to start getting unwound. That means bond prices could come down. We did see, though, that not only did bond prices come down, but we did see that yields came up. But, like I said, watch that 10-year yield. That 10-year yield is going to be your precursor on whether or not bonds are going to continue to fall in price. Yeah, it was up about basically almost 0.03%. So in other words, it went from 2.3% to 2.32% to 2.35%. Not what I call a astronomical move, but you clearly see that this level right here of 2.29%, which is basically that 2.3%, that's the level of yield that we're going to watch closely. It has to hold there if the bulls are going to have the yield bulls are going to have any upside potential. Now let's talk about the big banks that are going to be reporting tomorrow morning. Pull out your pens. I'm going to give you estimated moves that you can anticipate potentially happening, and this is what's being priced in by the options for potential moves into the for the stocks tomorrow. Citigroup. Taking a look at their implied volatility over the last 52 weeks, the implied volatility right now for Citigroup is being run at right around 24.2 as far as ranks concerned, on a scale of 0 to 100. 0 being with a 0 or 1 rank, meaning that they don't expect much of any movement, to 100 saying we think there's going to be a huge violent move either up or down. Here they're at 24.8. That's telling me that there's an anticipation of some potential moves, specifically $1.21 going into earnings. Now, with that being said, and you look at Citigroup, Citi right now has been trending to the downside. It's starting to just consolidate before the number, but it came down today. It actually finished the day up about 10 cents. Actually down, excuse me. I apologize. That must be after hours. But it actually finished down at 67.02. Watch 65.99, 66 bucks on Citigroup. They're pricing in the potential that it could actually touch that level, which is the 20-day moving average. That would put short-term bulls a little bit on their heels. Watch JP Morgan Chase. I'm going to be very interested to see what Jamie Dimon, if he says anything about whether his opinion on how or what they think, as far as the bank's concerned, that the Fed is going to unwind that balance sheet. There's $4.3 trillion worth of assets, both mortgage-backed securities as well as bonds, that are going to be coming off of those sheets. Banks want to know how they're going to unwind this, because that's really going to help them understand, hey, are we going to be able to charge more as far as rates are concerned, or are we going to be stagnant for the next 6 months going into 2018? Very interesting action here. Again, very bullish, but consolidating in front of the number at 93.10. Right now, JPM is running a 21 implied the volatility rank is at 21.7. That's pricing in about $1.39 going into tomorrow morning's announcement for this stock. So obviously, with a $93 stock, it's a little less than 1% being priced in, or a little more than 1% being priced in for the stock. 210 is the range that I'm going to be looking at through next Friday. So that gives you some context. Obviously, that can change with change in the move of the stock or change in implied volatility. Taking a look at Wells Fargo. Now, this one's going to be scrutinized pretty highly. The implied volatility rank is at basically 39. That's telling you that it's almost getting at the mid-level, or basically almost that 50% mark. It's higher than 50% higher than its low. Right now, it's 38% higher than where the low of the 52-week average is. So right now, I'm looking at Wells Fargo, $55.60. It bounced off of its 20-day moving average yesterday and held it today, moving to the upside quite nicely. It's got right now about a 91-cent move being priced in. So that's around a little over 2%. And about $1.33 going into next Friday. So you have a pretty interesting range here, roughly around 2.5% for basically the next 8 days, but specifically 91 cents going into tomorrow. And then finally, let's take a look at PNC. And I apologize if this is a little too long, but this gives you some idea of how I look at ranges. This helps me anticipate, what could potentially happen. This helps me, hey, do I write calls up here against stock that I own? Do I look at a bullish or bearish opportunity going into this? Very difficult to say that this is going to help me determine it, but looking at volatility does help me determine strategic approaches. This one is running at a 39 implied volatility rank, so it's getting up in the upper third of that lower tier of vol. Once it gets north of 50, that puts me on alert that there could be some potential big violent moves. Right now, PNC is pricing in through next Friday that the stock could be in a range of right around $2.73, either up or down. That's basically, you're looking around a 2% move being priced in this $127 stock, and it has had an impressive run. Let's watch this one very closely. All right, folks, giving you a ton of insights, ton of things to chew on, and I've given you all the background for today. So that's it for MarketStream.live. As always, you can give me an email, jcusick@moneyblock.com. I will answer any questions. If you have any other issues, any considerations, or you just want to say, hey, shoot me an email, or you can email MarketStream at info@marketstream.live. All right, we'll talk to you soon and have a wonderful evening.